Stock market update, 9th of August. Let's have a look at what the hell's been going on in these crazy markets. Are we going to make as much money in the second half as we did in the first? Okay, well, it's expensive. Price earnings, you're paying $33 for every dollar of profit Microsoft delivers. Amazon, well, there you're paying $339 to buy a share for every dollar of profit Microsoft delivers. Energy stocks, global recession, would you want to get into energy? Banks, you saw what the Italians did with a windfall tax. Would you be willing to get into banks? Well, we'll look at all of these, and why actually I don't mind them so much in just a second. If we look at performance, Amazon, for all its expensiveness, did rather well. So did Eli Lilly, Johnson & Johnson. We're forgetting some of these drug manufacturers. So we'll have another deep dive into what does look attractive. When it comes to price earnings growth ratio, and remember, the PEG is a measure of the share price compared to the growth in profit. So it allows for the fact that, well, maybe today's share price should reflect how profits will grow. There you see the likes of Apple, Amazon, Tesla, all the popular ones, still bloody expensive. The number should really be below 1 for it to be cheap. So there are some in the banking sector which are cheap, and we're seeing some in telecom services, obviously energy as well. Anyway, let's look at a bottom-up approach and look at individual stocks. Before we do that, it's the first time in ages that the NASDAQ year-to-date is no longer up 40% or more. It's only up 39%. We're going through that phase of profit-taking. Is it short-term? Is it long-term? I'll deep dive into it in a second. The S&P is up 17%. As for the UK, only up about 8%. So let's dive deeper into what the hell's happening with the NASDAQ and why does it not just continue going upwards, make our life easier, and just make us all stupidly rich for doing very little. So this is where it really flattened out around the start of the year. And you can see that has been the biggest fall that we've just experienced in the recent week. This monthly MACD, however, should still be rising, and the weekly should not drag it lower. In other words, these falls that you've seen there, let's zoom into those. Those falls you've seen there shouldn't be too steep. But yes, it could go there. I mean, if I was going to make a worst case, I'd say probably going to reach this upward trend, but so it's still got some way to go down. But over the longer term, to the end of the year, should still resume on an upward bias. Now, a little warning for you. Here's a little secret. Did you spot that? September tends to be a pretty bad year for the S&P 500. And August, well, it's only 50-50 whether it'll rise at all. And that gives me, again, some added reasons to assume we're not going to see this climbing until at least the end of September, I don't think. I think we're going to get a bit of that profit taking going on. Now, I said with the FTSE 100, should get that moving lower, and that's starting to move a bit lower as well. Apple, now this is really important, it's really instructive. Yes, you've got all these analysts telling you all of this, I get that. September doesn't tend to be good either there. Look at this, that upward trend, nice though it was, and I wish it would continue because it'd make my life a lot easier to becoming a billionaire, but sadly, destiny has another plan for me because it's fallen off a bit. And will that go lower? And of course the S&P is directly correlated to Apple. Well, we're seeing the monthly MACD flatten. It'll probably go flat a bit before rising up. The weekly is falling, and that may well fall for a little while before it goes up. So that's what I'm projecting going forward, and that takes us, as I've already said, into the end of September, closer into October before we recover and go back in that direction. I suspect that's the most likely scenario. The bull case, it does this. The bear case, which I don't think will happen, it does this, all right? The realistic case, it does that. So it's sort of that kind of a move. Now, remember that image, because that is a replica of what's going to happen on the S&P. Some of it might be a bit sooner, some of it might be a bit later. So, and some might be deeper with some of these stocks, okay? And some will obviously do the exact opposite and be completely uncorrelated, but we'll worry about those when we get to them. This is what the analysts think. They still think a lot more to the upside. I think they're right. It's just that in the short term, hold your nerve, it's going to dip a bit. Okay, Alphabet hasn't had that dip yet, and of course, a lot of popularity. September, not that great. You really do want to look at October and November, though. It's a lot better in terms of if you're playing the odds on that one. Anyway, there we go. That's what should happen. And looks like it's going in that direction and will continue doing in that direction. So it looks a little bit more attractive than Apple at the moment. If you put a gun to my head, would I buy Apple right now? If you put a gun to my head, yeah, because I want to hold it for the longer term, even though I know the short-term dips. Now, Microsoft, a little bit rather like Apple as well, just touching that upward trend, broken slightly below it, weekly falling and probably do that. The monthly will probably go sideways before rising, and the stochastics on the weekly and monthly tend to react a lot sooner. So that's what you're probably going to get. I mean, look at that. Certainly they've all learned a lesson, which is don't trade your investments, because they're all talking about longer term picks, and for them it's a buy. So no issues there. And by the way, September on the odds tends to be positive. October tends to be positive. Bloody hell, November, no brainer. So there we are, and that's what the analysts think. So would I buy it today? Yeah, if I had no choice, but I might rather just wait to see if I can pick it up a tiny bit cheaper, but I don't want to get too greedy and wait too long only to see it jump up and miss the opportunity. Okay, Amazon, well, that looks a lot clearer, like it's going to continue going up. Doesn't have the Apple problem at all, does it? Not at all. So that looks more attractive and still a long way to go. So of the ones I've mentioned, Amazon I'd really like, Microsoft I'd really like, a bit worried about Apple in the short term, but not in the medium to longer term, and Alphabet like. So I'd probably say Amazon and Microsoft, sort of numbers 1 and 2, and then the others 3 and 4 with Apple in 4th place. Okay, Disney, now to show something completely different, what do you get here? Just going this way. Now do not be led into thinking, well, look, all these banks like it. By the way, September and August tend to be awful for it. The last 3 months of the year tend to be great. Don't be led into thinking, oh, it looks cheap, Alpesh. Look, in the past it's been up at 196, double that price. Surely I can make 100% return. Yeah, in theory you should be able to. It's done it before, should do it again. All other things being equal, oversold and so on. I'm still waiting for something more solid before I say, yeah, I'd buy some more now. I've still got my old holdings. It's not done great, obviously, as you can see, but certainly the analysts think 151% to the upside on all of that. NVIDIA, now I've mentioned this many times before in terms of what to do, really does look like it's going to do a bit of this. Now the issue then becomes, does it do that or does it continue falling lower? If you are risk loving, you hold on to it because you think it'll do this. If you are risk averse, you sell now because you feel it'll do that. And the danger is that the weekly MACD drops off a cliff. It drags the monthly down as well. All of these fall and there's a massive sell-off. What do I think is more likely? Well, I'd rather just wait till next week and decide. You don't need to make the decision now, do I? All right. So the analysts think, on average, it's got another bit of return to the upside still there. How about Tesla, my friends? Well, you can see the monthly, and we projected it would do this. It's almost exactly doing what I've drawn. I mean, I drew A back in January, and then we had B, and it kissed that. C, it's done that, and D is what I've said, and it's what it should do. But don't be afraid, even if it drops down to there before going back up, because that's what it will almost certainly do. Again, things I want you to worry about, September and October tend to be bloody awful for it. Now, does that mean you sell it today and then buy back on the 1st of November? If you've got the time, energy, and can be bothered, yeah. Otherwise, you just hold on straight through. Remember, it was a special situation. It wasn't on my approved filtered list. Okay. Meta is approaching that all-time high once again. What a turnaround for what looked like an awful AR bet, and now it's AI. So from augmented reality to artificial intelligence has been the right move. Should be doing that. This is a bit overbought. And remember, when it's been overbought in the past and it's fallen down, then the monthly has often peaked as well, and you've seen those drops. So let's keep our head about us. If you're risk averse, you might say, you know what, I want to take some of those profits that we've had since the start of January when we got back into these quality 5 stocks. I want to take some of those profits off, maybe sell 50% of it because you've made a bit of a killing. You're welcome. And there's a more limited upside for the moment. Of course, in the very long term, 3-4 years, it'll keep going higher. ServiceNow, again, like Apple, you can see now what that looks like when it falls off and it's going sideways for a bit. It's going to give people a bit of a heart attack. I'm not selling out yet. because I think this upward trend should hold, even though it's going to cost me a small fortune in the short term for it to drop to there before it goes back up. And similarly, this falls and then rises and then this continues up. So I think there's enough upside there. Sadly, I think September, next month will be negative, but it'll make up for it thereafter. And certainly look at the buys on that. They're all queuing up, aren't they, to say buy, 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 buy. Okay, so that's where we are with it, and certainly the analysts think there's more upside. For those who are not part of the Great Investments Program, what's wrong with you? Have a look at my campaign for $1 million for a bunch of free tools and resources on how to pick stocks and invest a lot better and get more money for your investments. Now remember, with investing, and I've had this with a few people who've messaged me, you can't just say, oh, I switched off last September. It's your money. If you want to get 5% instead of 40%, I mean, the NASDAQ has had the best start since 1983, then yeah, feel free. Give your money to somebody else who'll charge you massive fees, get you 5% and leave it. If you're not bothered about your money, there's ample people who'd love to charge you fees for it. But if you are, then at least make the effort to watch these weekly updates, either on Wednesdays or the detailed ones on Fridays. Remember, if you're part of the Great Investments Program, on the private channel, there's a very detailed long one. And on the public channel, you'll see the shorter ones, a bit more like this one. Okay, hopefully you found all of that incredibly invigorating, energizing, and exciting. And now you need to take some smelling salts and lie down for a bit. Thank you.